welcome to Business Morning. This morning is a trading day right after the big drop yesterday on Custom Street. Yeah, over 2% drop the stock market. But let's unpack some matters today, and hopefully we'll get direction on what to expect for the markets today and maybe for the Friday trade. But let's kick off with oil prices now. We're seeing they've extended the decline today to near levels last seen before the start of the Iran war, as expectations of rising supply from the Middle East that outweighed the demand concerns there. So it's another big 1% drop again today, just like yesterday. 72.74. Brent still managing to hold on to that $70 per barrel level. WTI 69, sub 70 at this point. Both contracts hit their lowest level since February 27. August Brent was trading lower than September, which was priced at about 73.59, signaling ample short-term supply. So I guess Brent's on the way to $60 range per barrel. We'll definitely be hoping for that, and we hope the fuel prices drop as fast as the oil prices are dropping. We see President Trump fighting for that right there in the United States. Well, let's see how your money performed yesterday. We see the stock market suffered its biggest single-day decline of the year yesterday, as heavy profit-taking on major cement and power stocks triggered a broad market sell-off. The sharp correction wiped out 3.64 trillion naira yesterday. So see, 2.35% drop. Let's look at the trading activity. But all this happened on lower volume and value of trades, even deals, compared to the previous day. So it's not a widespread sell-off there, just some heavyweight stocks, being sold. Top trades, see First Holdco Financial Services, Chams for the 2.30 million traded. Access Score also showing up there on the top trades, 36.08 million. Let's look at other parts of the market now. Top gainers, we see International Energy Insurance again, 9.66%. This one has been on a run so far. Tantalizer, 6.98%. Then if you see the losers counter now, we see the cement giants there shedding big 10%. Then Gary Gould, that's for power, closing at 917 naira per share, a big 10%. There were also some big, block trades there. That's for Gary Gould Power yesterday. So yes, it was big sell-offs. We'll see if the bulls maybe make some kind of appearance today, and maybe some cherry picking from investors. All right, so other matters now. Fresh data from the Central Bank of Nigeria shows that credit to the federal government surged by more than 17 trillion naira over the past year, underscoring the government's growing reliance on borrowing despite a tight monetary policy environment. According to the CBN, total credit to government rose by 75.6% year-on-year to 40.38 trillion in May 2026. The data also suggests that banks are increasingly channeling funds into government securities, such as treasury bills and bonds, raising concerns about potential crowding out of private sector lending. So that's the latest one there from the CBN, still on that money supply data. Then we also see Nigeria's manufacturing sector has recorded the strongest value-added tax. That's value-added tax surge recently. And we also see that also highlighting improving activity despite persistent economic headwinds. New data from the National Bureau of Statistics show that manufacturers remitted a record 329.59 billion naira in VAT. That's in the first quarter of 2026, the highest quarterly contribution, by any sector, during the period. The figure represents a 12.8% increase from the previous quarter and nearly 3 times the amount recorded. That's 4 years ago. I've seen Nigeria's efforts to improve trade and port efficiency. That received a boost as the Nigerian Ports Authority and the police, they moved to eliminate illegal checkpoints along the Apapa and Tinkan port corridors. The move comes amid concerns that unauthorized roadblocks and traffic bottlenecks continue to delay cargo movement and increase logistics costs for businesses. To address the challenge, the NPA, police and other stakeholders have agreed to strengthen coordination, improve traffic flow, and eliminate extortion along port access roads. The NPA says the measures will help reduce the cost of doing business, speed up cargo evacuation, and enhance the competitiveness of Nigerian ports. And obviously that should also help us with inflation, bringing down inflation at this point, because that cost is passed on to the consumers after that. All right, a coalition of farmer groups in the nation's capital are calling for a decentralized system to access the federal government's intervention under the Bank of Agriculture. Leaders of the group who made the call explained that any further delay in action may lead to low productivity during the farming season, could also, get food inflation higher and lead to food shortages. Take a listen.
Our concern is not born out of opposition to the government's efforts to support agriculture, but rather from the practical realities faced daily by millions of farmers who are the intended beneficiaries of these interventions. Over the years, the federal government and development partners have introduced numerous agricultural support programs aimed at providing food production, enhancing farmers' livelihood, and strengthening national food security. Such programs include the National Agricultural Growth Scheme, Agro-Pocket, NACS-AP, Japan International Cooperation Agency, JICA, supported agricultural initiatives, and several other intervention schemes funded by both domestic and international partners. Unfortunately, the decision to centralize the implementation and disbursement of these programs through the Bank of Agriculture has created significant challenges that are undermining the objectives of these interventions. Our major concerns are as follows. Number one, limited accessibility by farmers. A large number of farmers, especially those in rural communities, have limited access to the Bank of Agricultural branches and services. Many farmers travel long distances at considerable cost, only to face delays, bureaucratic bottlenecks, and administrative hurdles. Similarly, a high level of illiteracy among local farmers and inadequate internet connectivity make it difficult for many rural farmers to open and operate the mandatory account required by the Bank of Agriculture.
I would see the Nigeria Customs Service, they intercepted prohibited imports worth over 273 million naira in Cross River and Akwa Ibom states. The area controller, Mr. Momodu Dauda, told reporters that officers of the service seized 1,996 kegs of foreign refined vegetable oil, 1,500 used tires, 105 bales of second-hand clothes, and 800 liters of petrol smuggled through the Odukwani-Calabar highway. He explains that all the items are on the federal government's import prohibition list. Take a listen.
In the course of our routine anti-smuggling operations, my officers and men successfully intercepted prohibited imported goods within the command area of responsibility. On Sunday, 14th June 2026, our patrol team along the Odukwani-Calabar highway intercepted a truck laden with foreign refined vegetable oil. Upon thorough examination, we discovered that the container containing about 1,996 kegs of refined vegetable oils of 25 liters with a duty-paid value of 195,428 naira. In addition to this, the command also intercepted 1,500 imported used tires of various brands and about 105 jumbo-sized rolls of second-hand clothing. Earlier this morning, officers and men of the command intercepted about 800 liters of premium motor spirits with a DPV of 1,152,000 naira. The interception brings the cumulative volume of PMS seized by the command this year to approximately 5,760 liters. In line with safety protocols and considering the highly combustible natures of the product, the seized PMS has been promptly disposed in accordance with established protocols.
Seizure right there from the customs. All right, let's head on to our first conversation now. We're looking at the latest data from the Central Bank of Nigeria when it comes to money supply and other matters in the commodities market. Ralph Jumabi Oluwole is a researcher, research manager at Financial Directors Company. Great to have you on the show, Jumabi. Good morning.
Having me.
Yeah, so we see money supply, or M3, that accelerated to about 8.39% year on year in May from 4.83% in April. What factors are driving this sharp increase? Do you think we should be seeing an increase, at this point?
I mean, from the numbers, we've seen that net foreign assets, net domestic assets, both increased, supporting the jump that we saw in broad money supply. And not only broad money supply, that is M3 increase, we also saw an increase in M2. So that is all money supply factors are increasing. And that means, in simple terms, what even makes up, money supply. So we're looking at currency in circulation, currency within the banks, which includes, savings, deposits, and all the likes. And more importantly, when you look at M3, you also look at, external inflows and how that is feeding the banking sector, or the money market in Nigeria. So a few things that have, supported this increase, apart from what I had mentioned, which is net foreign assets, net domestic assets. We've seen that, number one, there has been an increase in, FX inflows, primarily from so crude oil, production increase, crude oil prices increase, and that of course supported the inflow of FX that supported, the net foreign asset that has, of course improved the M3 numbers. And then within the domestic economy, we've also seen like an increase in, money market activities, interbank activities, increase in treasury, fixed income activities, all of that supporting the movement in money supply. But the key thing that, of course, has remained like a big risk is how that despite, this increase in money supply, lending to the private sector, did not improve. And of course, that makes sense when you consider that lending rates have been, significantly high due to the fact that the Monetary Policy Authority, the central bank, has left, interest rates higher for longer to curtail price pressures in the economy. So I would say that puts together the summary for the money supply increase.
Right, and definitely we'd like to see more credit to the private, sector. But, given CBN's tight monetary policy stance, should we be surprised, that it's actually increasing, that's money supply?
I mean, when you consider the factors that have driven it, not so much. I know the idea a lot of times behind it is, that means a lot of money is moving around. There's cash, there's a lot of cash in the economy, but it's not only cash that makes money supply.
The average man on the street will say, why is the money not coming to me? Money supply is increasing, but it's not in my pocket.
Exactly. So that's why, I kind of tried to segregate or really go further in explaining the components of money supply and what exactly has driven this increase. So it's not only like cash in circulation. If not, it will be more around, oh my God, there's a lot of cash. So why am I not having cash in my own hand? Why can't I spend as much? And why am I saying that money supply is increasing? So there are other factors that have contributed to this increase. But I think it's also important that we also check the fact that cash in circulation did not necessarily jump as much, and that of course necessarily points to the fact that we're seeing an increase in the adoption of e-channels, with the fact that insecurity is also on the rise. We're seeing more people, adopt using the banks. The fact that we're also seeing like more friendly payment systems where you have POS merchants here and there that are easy to access for, rural communities, smaller business owners. It has become easier to access the formal financial market. And when you even look at the NIBS data, you see the movement of POS transactions, you see the movement of transfer transactions. You realize that, okay, a lot of individuals are beginning to adopt these channels more, and so that in itself is supporting the slowdown thereabout in cash in circulation. And more importantly, it also points to the fact that money supply right now is not the biggest driver of inflation in Nigeria today. The simple definition of inflation is too much money chasing too few goods, and right now that's really not the case in Nigeria. The increase in money supply is not directly proportionate to the increase in inflation. So there are other factors that are driving inflation in Nigeria today, and consequently the squeeze in income levels for consumers and broadly households. And there we now start looking at the fiscal aspects, the supply chain factors, the insecurity factor, the agric productivity factors, all of which that continue to drive inflation in Nigeria.
Right, and looking at money supply still rising, does that mean we can't expect inflation to actually drop in the near term?
Well, I again, like I mentioned, there are other factors, driving inflation right now. So not because money supply might not have an impact, but its impact is not as much, to significantly nudge the decision to either cut rates or drive inflation exponentially, higher. And that's exactly why understanding the components of money supply right now today is extremely important. And from the beginning of the conversation, we've been able to establish the fact that what necessarily is driving this increase in net foreign assets or net domestic assets are primarily increase in FX inflows, increase in FX inflows from external factors, increase in trade activities. And then in domestic market, we're seeing more interbank activities, not necessarily too much money within the, within the Nigerian demand side, the demand side of the economy that would be driving inflation. But I also think that it's important to still note, I do believe that the central bank would definitely consider it as a factor. But I guess the major thing I really want to, emphasize on in the conversation today is that monetary, factors right now are less, of a driver of inflation than the supply side factors, which are really within the purview of fiscal authorities to resolve. And we know these factors, right? Insecurity that is significantly affecting, the ability of farmers to get into their farms, produce, and then, increase food supply, which ideally we still know is a major driver of, inflation today. You also consider the logistics cost, petrol prices, even though, of course, we're in a different market where global forces and other market forces determine the price of petrol prices, but not until we improve our own refining capacity that we'll begin to see a significant decline or at least some stability in petrol prices that continues to increase logistics costs, supply chain costs, and of course again impact inflation. Because on the monetary side, money supply, despite the fact they're increasing, the main drivers are well contained. And then on the FX side, we're also seeing some stability. So I will say the monetary policy side is somewhat in check.
All right. So we see private sector credits, that's dropping, but government borrowing, that's risen so far. Definitely not the kind of not how you'd like your economy to run. But how can we make lemonade from this?
I like the scenario you put here, because ideally it's a bittersweet situation. So lemonade is not all sweet.
All right.
But I think that we do have some bright spots, and I do think that there are some policy changes that that can be made. But again, I also want to emphasize that it's not so much on the power of the central bank, because their responsibility is to ensure price stability, and that primarily revolves around inflation and exchange rates, right? So, and they are doing their part. On the government borrowing side, the logic behind it is not too far-fetched when you consider that the government is also trying to not increase their exposure to global interest rates or foreign currency pressures, right? So they have leveraged more on borrowing domestically. While this of course raises the risk for crowding our private sector, to some extent it reduces the external repayment risks that the country could face later on. On the business side, I do think that there might be some concessions that could be made, and some of these things are already happening. For instance, the gazetting of the AFCTA, tariff, to ensure that local businesses can export their materials outside of Nigeria within other African countries. At a cost that is, very bearable. Domestically, I do think that some of these concessions also need to be made when you consider that there are smaller business owners, and concessions around, power, concessions around logistics cost. And maybe I do bodies and institutions like the Manufacturing Association of Nigeria, the agricultural bodies, I think those conversations need to happen a lot more to ensure that there is streamlined communication and policy incentives that benefit all parties, so that we don't see, more labor market disruptions like strikes and all of that across the nation. So again, I do think that there's a lot more work to be done on the fiscal side than more on the monetary side. But communication in itself, in my opinion, across both bodies, which is both fiscal and monetary, I think it's still extremely important. A lot of business owners and individuals do not really understand the technicalities of monetary policy and why the central bank is not just helping us remove inflation from, what it's from about 15% to just zero. Just tell everybody that inflation is now down, So people need to understand the reason why that's happening, and maybe more non-technical communication needs to happen across the board. And on the fiscal side, I think that a lot more work needs to happen across from the federal government to the MDAs to the local government bodies. There seems to be some level of dissonance in how communication happens across there, and that continues to widen the trust deficit between the people and the government. And I think until that is addressed, all of these issues will still remain.
All right, let's pivot to the oil markets now. We're still seeing the drops continue. At this point, the shorts are still winning. From last week, into this week, WTI sub $70 per barrel. At this point, do we see more drops coming today?
I mean, yes, I do. I think when I had a conversation with you on Tuesday, we did speak about possibility of oil prices falling further to around $70 per barrel, and I think that that's going to be the case, and if not even lower. The main thing here is that there's now an increase in supply, right? That is nudging this price decline, and the expectation is that it would likely continue, right? So I think that we would see more declines in the oil market as long as the US-Iran talks continue to progress positively. The Strait of Hormuz remains reopened. I think that would continually support the decline in oil prices. And of course, when we bring that to the domestic market, we should likely see the NNPC and Dangote refinery continue to reduce prices to ensure that domestic market enjoys the benefit of the reduction in global oil prices. That should somewhat alleviate some of the pressures we've seen on logistics and distribution costs, and maybe to some extent to food prices, even though for food prices we still see more pressure around insecurity issues that are nudging more, that are stoking food inflation right now. The other thing to consider here is the change in the monetary policy environment, right? So globally, we would likely see global central banks like the ECB, the Bank of England, the US Fed begin to take more. They will remain cautious, but I do believe that we could start hearing more conversations around them, maybe resuming their rate cutting cycle if downward pressure on prices persist, especially with energy costs and then food costs. So I think that that conversation now is back on the table, and if we see them lead in that direction, we might see African central banks follow suit, and maybe the Central Bank of Nigeria also follow suit. But again, there might be some lag before we see the central bank cut rates, simply because the inflation rate in Nigeria, while it's better than where we were some years ago and even a few months ago, I think that the central bank will still remain very orthodox in how it approaches cutting rates, especially to keep investor sentiments and investor confidence positive.
Right. And maybe talking about lag at this point, remember when the Iran war, started, oil prices started, shooting up, crossed $100 per barrel. The speed at which fuel prices rose, I still can't fathom it, but it's not that fast, even though prices are dropping so fast. Even President Trump is worried.
Interestingly, I knew where your question was headed before you even landed. I think we have seen, I'll point to two things here. The first one is uncertainty, right? While the global markets, typically react very quickly to when price increases and even before now when prices fall, because we're now in a different, ecosystem in geopolitics, where today the market could look stable and tomorrow things change very drastically. So I will say that level of uncertainty, the markets are heavily pricing it in so that they don't take too much of a big bet on prices significantly falling, and then it becomes a problem later on. Everyone wants to hedge as much as possible. So I think that's definitely the case, and that's why we're seeing this happen.
Right.
More importantly, the level at which we're seeing, new vessels exiting the Strait of Hormuz. I mean, remember, it's not as fast, right? So until that conversation and that progress significantly increases, we wouldn't see prices drop significantly, and it will be the same in Nigeria as well.
Right. I guess when prices of oil rise fast, we don't really care much about hedging, but when the prices come down, we want to hedge to make sure it's really, really coming down at this point. Thank you so much. Dumebi Oluwole, Manager for Research at Financial Derivatives Company. Thank you so much.
Thank you for having me.
All right, we'll take a break now. When we come back, more issues around Nigeria's energy sector. That's in a moment. Just stay with us. The federal government of Nigeria is adopting community-based renewable energy projects there. The Lagos Chamber of Commerce and Industry, a Renewable Energy Outlook Conference, industry leaders and policymakers announced a shift away from expensive diesel generators towards renewable energy to rescue Nigeria's manufacturing sector. Take a listen.
Lagos Chamber of Commerce and Industry is concerned about the cost of energy transition in Nigeria, and this Renewable Energy Outlook Conference is proof of that. Discussing policy, investment, and industrial-scale deployment has the Minister of Power, Mr. Joseph Tegbe, in attendance. He notes the consequences of insufficient energy to the rail sector, a challenge he promises will be short-lived.
This generator as a primary power source is drawing to a close. And we're seeing that. We're deploying mini-grids, solar-powered mini-grids across all universities. We're deploying to teaching hospitals. We're identifying 85 most densely populated communities in Nigeria. And we're deploying solar mini-grids through REA, some of them through World Bank funded, through AFTB program, through JICA program, to our markets, to our universities, to our teaching hospitals. In the next few weeks, I'm going to be on the road, by God's grace, launching some of those programs. I'm going to do one. Once I leave here and I'm going to Ekwe, I'm actually commissioning and launching one of such mini-grids. So embedded generation, industrial mini-grids, we will move, and we are planning to move from household solar panel and inverter to community-based mini-grids. And the enabling law is there. You are running, you have your support with solar grid here. If you are generating in excess of what you want, the law allows you, through net metering, to sell to the next building. We just need to make sure that we get that act properly operational.
This conversation is intentional, which LCCI says will be followed with actionable points that will make operational difference, especially using renewable energy.
Over 60-70% of our people that live in rural areas, they don't actually need the national grid. They only need electricity to charge their phone and give their light. You can now imagine to take nearly 50% of our people that live in the rural area off the national grid, and you are giving them 24 hours light based on renewable energy. Then the concentration will be able to be on electricity as a means of production. As I've said, We can now put this electricity in a cluster, encourage cluster of industries.
Nigeria has 37 trillion cubic feet of proven natural gas reserves, receives an average of 5.5 kilowatts per day of solar irradiation, and is among the highest in the world, and yet delivers just about 4,900 megawatts of available grid capacity to a population of over 220 million people. LCCI believes this is an anomaly that has to be fixed. Cuts.
Yes, definitely has to be fixed. So much gas, reserve. We hold one of the largest natural gas reserves in the world, yet millions of households and businesses continue to grapple with high cooking gas prices and persistent supply challenges. The government is rolling out new measures aimed at boosting domestic, LPG availability and deepening gas adoption. Critical questions remain around infrastructure, pricing, investment, and the country's broader gas ambitions. To unpack these issues, we're joined by LPG and natural gas expert Godwin Okoduwa, is the founder, LPG in Nigeria. Great to have you on the show. Good morning.
Good morning. Good morning. Good to be here. Thank you for having me.
Fantastic. So, yes, we have so much, and it almost seems like it's a story across most of our assets, natural assets, and even human resources, natural resources. We have so much of it, yet it's not able to go around. We're not able to get it, affordably. So, we've described we've been described as a gas-rich nation. Why then are Nigerians still paying so much? Look at the price of of cooking gas. That's risen from 1,200 naira per kilogram to about 2,000 naira per kilogram, 66.7% increase. Help us understand this anomaly.
Oh, well, this is no longer the case anyway. It has since dropped, and this was a temporal disruption in the market. It happened just in May. Before the Salah, those that bought LPG before the Salah were surprised by the end of May to see price change. And this is not the normal case, and it happened as a result of shortage in supply. We had supply issues. If you look at NMDPRA facts, you would see that the supply dipped in May, and that was what affected the market. So
for a country that has so much proven reserves, why are we still struggling with supply?
So, yeah, that's a good question, and that's why we have to be intentional with how we manage our resources. We need to know whenever there is an issue in one aspect of the supply value chain, which we're able to be proactive in our week. So what really happened was that the market was not aware of the dip in supply, and I have said this several times in several fora. The dip in supply from Dangote affected the market. So if we don't monitor the market, we don't monitor the volumes coming out of the market, this will happen over and over again. So we have several sources where we can get a lot of LPG. Energy is already doing a lot. BRT, Seplat is bringing some volumes. We can get more volume from Chevron. We can utilize the flare points we have. Reports suggest that we can get up to 600 metric tons of LPG additional from our flare points. Also, we can get up to 540,000 metric tons from Chevron. Last year, we did the market in Nigeria, annual volumes were about 1.6 million tons. Of that, Dangote supplied 700,000 metric tons. And NLNG supplied about 500,000 metric tons. The balance came from gas, local gas processing plants like Kwale Hydrocarbon, Greenville, PNG, Umutu, NEPA, Ologbo, and the others came from imports. Imports dropped significantly as a result of Dangote supplies. So when there's a disruption in supplies, the market will feel it, and the forces of demand and supply played in May. So supply dropped and the market felt it. There was a scramble for the available volumes. And now Why did I say that was temporary? It's no longer very fast. It has dropped so fast within a week from 2,000 to say 1,600 thereabout, and it's still dropping. It's still dropping because we had more supply.
which is still quite high at 1.6.
Still high.
Yeah.
Yeah. Still very high, yes. So what is going on is that retailers who bought expensive products would not drop drastically. They have expensive stock. So as new stock comes in, prices drop. What you find right now is a scramble to offload because you want to curtail your losses. You want to manage your losses. So there's a scramble to upload your stock, and prices are now dropping, which is good for the market.
All right, and I hope the prices drop, even further, at this point. But let's look at the international gas market now. We've seen price rise from over, it used to be about $2 something for a while for about MMBTU. That has risen to about $3.20. Current price about $3.33, up about 4% today. In 7 days, is up about 7%. So is there a chance the international, gas price market has some kind of influence for our domestic market?
Yes, but minimal. I'll tell you minimal. Our natural gas price is shielded from this. Our price, local price, is about 2.18 at the moment. It does not follow this. So those in the natural gas space did not have the outcry we had at the domestic end. Now, how did they affect domestic end? Because there was the Strait of Hormuz was shut, and there was a scramble for LPG from the America. North America, Central America. There was a scramble for it, so it was difficult for those who would want to import to get it quickly. There was additional premium. All right. Apart from the fact that the market did not have the required information to incentivize the importation, because you don't want to lose. Like I said earlier, yesterday I was discussing with one of your colleagues. I said to bring in a 5,000 metric tons, for instance, you would probably spend $3 million US. And if you bring in the product higher than the prevailing market price, you're toast. Your investors will come for you. So you have to be well informed. The market has to be that coordinated to the extent that the market can, take informed decision from data available. The NMDPRA data fact is beautiful, but it always comes after the fact. If we have a system where marketers can read what is going on and quickly act on what's happening. But to go back to your question, yes, there was a scramble for LPG from America, and it was difficult getting products, and there was premium on it. Interestingly, I monitored the international LPG price. It didn't quite react the way other prices reacted. It started reacting about that May period, but it retreated quickly. Immediately, there were signs, there was some optimism about the peace agreement between US and Iran, and it has retreated close to pre-war levels currently.
All right, so still looking domestically now, we see the federal government, they've unveiled, fresh measures to boost LPG supply. Do these initiatives address the root causes of the problem, or are they merely, short-term fixes, in your opinion?
I would say that the LPG industry has been deregulated for a long time. All right. We had the support of the NLNG at the start of this domestic LPG scheme. They subsidized their vessel supply at some point when the market was too small to, rent their own vessel. So there was some subsidy at some point, that kind of subsidy. But for more than a decade, the market has been driven by forces of demand and supply, and the activities has been driven by purely private sector. So imports, you're not going to ask the private sector to import without guaranteeing profit. All right, the 2 vessels that came in from Navgas and Rain Oil were private sector driven. Nobody had to mandate them to bring in LPG. They saw the gap and they brought in LPG. So I read the communique. There's no hoarding going on. That's also after the fact. Marketers, retailers are offloading, or else they're toast. Everybody's trying to manage their losses. So you cannot mandate marketers to import. You have to show them that when they import, it will be okay. They will make profits. So marketers will naturally import, but they have to be sure about their figures. All right. If you tell us that Dangote is no longer going to supply, of data has actually showed that Dangote is not going to do 700,000 metric tons this year. From if we look at the previous performance last year, they may not do 700,000 this year. So that creates a gap, and that creates an incentive. All right. So the government cannot mandate, except the government is saying, should you lose, we are going to assure that you'll be profitable.
All right. I guess, at this point, exchange rates, that's been stable for a while now. So that's not an issue right now. I know before now that was an issue for, gas prices, but I guess it's a supply matter now. All right. Thank you so much, Mr. Godwin Okoduwa, as a founder, LPG in Nigeria. And I hope those prices continue dropping for, cooking gas. Where do you see it dropping next to?
Well, I think we have to be careful. Are we actually supplying the actual volumes required for the market, or what we're experiencing is market sentiment? Because it's very possible. It may just be that fear, prices are dropping, And the next thing we find is that there are no volumes in the market. What happens? It jumps up. It's just natural.
Right.
So we have to be very careful. So going forward, the authorities have to watch our volumes, and it has to be dynamic. We don't need figures after the event. We need to know what's going on. Today, the market takes about 140,000 metric tons of LPG monthly. How many tons has the market taken? From offshore supplies, from import, from inland gas plants, how many metric tons have we taken at the moment? We would like to know. If we know, we can decide. We can now say, is it surplus? The market is at surplus at the moment, or there's scarcity.
All right. Well, I was hoping you would say sub 1,000 naira per kilogram, but it's fine. Thank you so much.
Thank you.
All right. So we see. Thank you. All right. So we see Nigeria and France are set to deepen their long-standing strategic partnership with renewed focus on trade, technology, agribusiness value chains, academic exchange, and student mobility. To the French ambassador to Nigeria, Marc Formbestier, reaffirmed this commitment at the inaugural France-Nigeria Business and Human Capital Development Forum, noting that Nigeria remains France's largest trading partner in sub-Saharan Africa. Our correspondent Kelly Agiga reports.
The inaugural France-Nigeria Business and Human Capital Development Forum has brought together policymakers, business leaders, academics and development partners to explore new opportunities for strengthening economic and institutional ties between both countries.
Characterized by rapid technological change.
In her opening remarks, the host and Professor Olainka David West said the forum is designed to promote cross-border collaboration, stimulate innovation, and develop the human capital needed to compete in African and global markets.
Partnerships have become more important than ever. The relationship between France, one of the world's leading economies and centers of innovation, and Nigeria, Africa's largest economy and one of the most dynamic markets holds tremendous promise and opportunity.
Reaffirming France's commitment as a key economic partner, the France ambassador to Nigeria highlighted technology, agriculture, renewable energy, and the creative sector as emerging areas of mutual interest and growth.
Among many other things, our partnership, and I truly believe it, is about building ecosystems. It is about strengthening institutions. It is about empowering people.
As both countries seek to expand their relationship beyond trade, discussions at the forum also focused on how Nigeria can leverage strategic partnerships to drive long-term economic transformation.
And the strategic objective of this conversation is to explore how France and Nigeria can deepen their partnership beyond trade and investment into a long-term collaboration that is focused on economic transformation and, of course, Africa's future competitiveness.
Participants are expected to develop a framework for sustained Nigeria-France collaboration, including joint executive education programs, expanded academic exchanges, and a roadmap to deepen economic cooperation in the years ahead. Kelly Egiga, Channels Television News.
Good morning, everyone. It's time for global news. And we start from, well, the first trillionaire, now no more. Yes, Elon Musk is no longer a trillionaire by the time markets closed on Wednesday. Plunging shares in Tesla and SpaceX dragged the tech magnate down to billionaire status. And Forbes listed Musk's net worth as $970.2 billion. Well, he reached trillionaire status on June 12 after SpaceX's historic initial public offering. The rocket, satellite, and AI company's debut on the stock market made Musk the first person with a net worth of more than 1 trillion naira. His fortune continued to hover around that gigantic figure in the weeks following the initial public offering. A global stock sell-off this week led to sharp declines for major tech stocks and dealt a blow to his wealth. However, investor concerns that the Federal Reserve will potentially raise interest rates and looming fears of an AI bubble rattled the market. And of course, that led to that drop from being a trillionaire to being a billionaire. Let's get more on the happenings of the United States market at the close of trade on Wednesday. We have our correspondent, Maria Bird.
The U.S. stock market was mixed on Wednesday, as the Dow Jones was up at 0.35%, the S&P 500 was down at 0.1%, and the heavy tech Nasdaq led the day down at 0.43%. As many investors were watching oil prices on Wednesday, as it's clear that the oil prices have dropped well below what the costs were prior to the U.S.-Iran conflict. As even though these oil prices are driving down gas prices, which is a positive sign for the U.S. economy, the U.S. president is still calling for more and asking that the oil prices drop even further. As many investors continue to watch how this could have an impact on the U.S. economy in days and weeks ahead.
We're still in the United States, where J.P. Morgan Chase has unveiled a new $50 billion share repurchase program and raised its quarterly dividend after the Federal Reserve found the industry remained well capitalized under its annual stress test. The biggest U.S. bank by assets said it will increase its quarterly dividend 10% to 1.65. That's $1.65 for a share, and that's subject to board approval and authorized the buyback program. That's effective from July 1st. The announcement follows the release of the Federal Reserve's annual stress test, which found that all 32 large banks remain above their minimum capital requirements, even after a hypothetical recession, generating more than $708 billion in projected losses across the industry. Unlike in previous years, however, the results will not affect banks' capital requirement. The Fed chair earlier this year said that it would keep stress capital buffers unchanged through 2027 while it overhauls the testing methodology, meaning banks entered Wednesday with a clear understanding of their capital requirements. And JP Morgan has been really busy. They've hiked the year-end target for South Korea's Kospi index, stating that artificial intelligence and the data center build-out presented a directional bullish view despite heightened volatility in local markets. JP Morgan said that South Korea remained its most preferred market in the region and hiked its year-end target for the index to 12,500 points from 9,000 points. The new target represents a nearly 48% jump from the Kospi's close on Wednesday. JP Morgan has also set a bull case of the Kospi, reaching 15,000 points by the end of this year. Kospi is the best performing global stock index in 2026. It's up more than 100% on a stellar rally in local chip making market. And memory chip giant SK Hynix Incorporated and Samsung Electronics Limited are at the heart of this rally. And still in that space, Micron has announced its third quarter earnings after the bell on Wednesday, beating analysts' expectation on the top and bottom lines and surpassing estimates for the company's fourth quarter revenue outlook. Micron also declared a quarterly dividend of 0.15 per share. That's about 15 cents per share. Micron stock rose more than 6% on the news, pushing chip stocks broadly higher after tumbling earlier this week. Commodities now. Palm oil futures posted the biggest drop in more than a month, tracking declines in crude and soy oil prices, while a strengthening ringgit added to demand headwinds. Futures fell as much as 2.4% to nearly 4,500 ringgit a ton, and that happened in Lumpur, extending declines to a third day after global crude benchmark Brent gave up its wartime gains. As the U.S. and Iran made progress on a peace deal, soy oil in Chicago was 0.6% lower. In Australia, unemployment rates unexpectedly fell in May as employment rebounded strongly, suggesting that labor market remains resilient and keeping bets alive for another rate hike by the Reserve Bank of Australia. Employment rose 40,300 people in May, reversing April's revised decline of 40,700 and exceeding economists' expectations for an increase of 31,200, according to data from the Australian Bureau of Statistics. And full-time employment increased by 5,200 jobs, while part-time rose 35,000, as ABS head of Labour Statistics said that the rise in employment reflects an easing backlog of unemployed people waiting to start jobs. The participation rate held at 66.7%, slightly below expectation of 66.8%. And still in Australia, Australia's housing downturn has wiped $185 billion off the value of the nation's top two markets so far this quarter, a result that is likely to weigh on the wealth effect that underpins consumer spending across the economy. Sydney prices dropped 2.7% between March 31 and June 25, erasing $120 billion from the value of stock, while Melbourne declined 2.3%, shedding $65 billion, according to calculations by economists. And of course, that's might be a little bit of trouble in the market. And finally, the Climate Investment Funds, which is a $14 billion pool of climate-focused capital, says that 75 countries have applied for adaptation finance through a new program that's designed to promote initiatives aimed at providing protection against the impact of climate warming. The Accelerating Resilience, Investment and Innovations for Sustainable Economies, or ARISE program, attracted expressions of interest from 61 countries and 8 regional groups, bringing the total to 75. And the CIF has made as much as $250 million available for the initiatives, with co-financing expected from other institutions. Most of the applications came from Africa. Those are the global news we have for you at this time.
right, thank you so much, Ini. Definitely, I don't mind being Elon Musk right now, dropping from a trillionaire status to a billionaire status. Not bad at all. The NGX right now trading flat. Access Holdings, Chams, FCMB getting attention. Bitcoin trading around $61,000. Gold smack on $4,000, and the dollar index still near 13-month highs there, affecting most assets at this time. Ini John McCall will be back at 1:30 with more updates. Thank you for watching Business Morning. I'm Ladi Williams. Remember to buy low and sell high.